Good morning, traders. Chris Weston here, Head of Research at Pepperstone. It's been a bit of a risk-off vibe coming through in markets. Certainly, if you look at treasuries, the US bond market, they've been seeing some really good buying coming through in the back end of the curve. There's been some strong flattening of the market there, and I think markets have resonated. That's resonated across asset class. Been good buying in the US dollar. There's been reversals all around. Now, part of that is down to what we were seeing in the crude complex. Crude snapped back, and it's found some really good sellers. In fact, commodity prices more broadly have seen some really big volatility. Corn's gone limit down. In fact, it's a really good, interesting time just to detail that we have been expanding our commodity products across agricultural, softs and energy for the last year or so, and we've just released overnight lumber, corn, lean hogs, cattle, gasoline, oats, soy meal, soy oil, and rough rice as well. If we have a look at the my MT4 platform here, we can have a look in symbols, and you can see the energy products now that we're offering. In metals, you can see that we're not only offering gold and silver in US dollar terms, but also in alternative currencies as well. So gold in Aussie dollar terms would have probably done quite well last night. Gold in US dollar terms would have done somewhat poorly. If you're looking to go shorter a commodity, you really want to do it in the strongest currency, and if you want to go longer commodity, you want to do it in the weakest currency. That's one to focus on. So you can take the dollar out of the equation. If you are looking to go long the Australian, the gold price, then perhaps do it in an alternative currency than the US dollar would have worked much better last night. Now have a look at the other commodities that we're offering now. So a fairly extensive range of softs and agricultural commodities there. And when these trend, they do go in a continuous line. They can be some of the best trending vehicles that you see in the market. They have strong momentum. So for trend traders out there, they can be really, really good vehicles to look at. And these don't tend to be intraday moves. They tend to be long-lasting moves that can go on for weeks. So it's sort of largely, in a lot of them, you take the Fed out of the equation. You tend to look at more sort of supply-demand issues, and when they trend, they can trend absolutely beautifully, and you can hold for periods of time. So we're offering those now to clients. So do put them on your watch lists. We're trading in fairly compelling spreads and zero commissions as well. So one to put on. But we have seen some big movement coming through, and there's been reversals playing through in markets left, right, and centre. Let's go to my other platform here, because I just want to show you the extent of the bond market. Now we can see the curve here, 2s and 10s. So we're looking at the yield differential between front-end yields and long-end yields, 10-year treasuries. And when this is declining, generally it's a very simplistic level. The market's seeing future growth prospects as somewhat dwindling, and the fact that we've come down from around 160 to 112 in a fairly short space of time, I think is telling you quite a clear message that people have been buying the back end of the curve. Now that may change as we go into the FOMC minutes. We're obviously expecting them to be quite hawkish, but if you have a look at the US 10-year, it's down about 8 basis points. So really, really big move, huge buying coming through, which has driven yields down, and I think that's resonated across markets. Usually we would see a US dollar selling situation, or you'd see a reversal playing through to the downside in the US dollar when yields are falling. But I think when you're seeing, as part of the sort of dollar smile complex, when you do see bond yields coming so bid across all parts of the curve, you tend to see a risk-off thematic playing through and the dollar benefiting from that. Now I think if you look at equity markets, we'll look at currencies in a second. Let's have a look at the Russell first of all. I mean, we've got the Russell down 1.4% at the moment. So you've seen the value index effectively coming under a bit of pressure. We've got the S&P down. Well, it's down smalls, but if you have a look within the sectors there, we've got the energy sector down 3.2%, financials down 1.6%. We were fairly bullish on financials recently, but that move that we've seen in the bond curve is really been hurting. So obviously move to the sidelines on that one. That's until we can see bond steepeners coming through and 10-year treasury yields moving higher, financials are going to underperform in this market because they borrow on the short end and they price loans off the long end, and therefore when the curve is flattening out, you tend to see their net interest margins coming under pressure. As you can see, we can see REITs at the top of the pile. They've been doing really well. Obviously, a bond proxy there. Discretionary's been doing well, 0.8%. Utilities. So, if you look at this mix we've been seeing, it's been a thoroughly risk-off session. Materials down 1.4%, and that's probably going to resonate coming through in the Asian markets. You can see the Nasdaq continues to pile on. Now, this has been a really interesting space because the Nasdaq now, for a lot of these tech companies, the high growth, your Apples and your Microsoft of this world, are very much seen as a risk-off play. They're very defensive. Okay, fine, they're quite short duration assets, but you do see a situation where market just sort of come out of these cyclical stocks and go into the stay-at-home stocks, the beneficiaries of, of what we see there. So, when bond yields are moving lower, these tech stocks seem to do quite well, and that's what we see. The Nasdaq continues to be a momentum juggernaut, so we continue to stay long that market at the moment. If we have a look in the stock market, have a look at some of these moves we've been seeing. Baidu down 5%. The GameStops, the meme stocks getting pretty badly beaten up. Have a look at Baidu's chart that we're seeing. Head and shoulders playing through. We've obviously tested the neckline. We've come back there. If you get a break of this 177, I think this could be going down pretty hard. I reckon this could be Goodnight Vienna coming through. There's been some big moves coming through in a lot of these kind of meme stocks and high growth stocks. So that's one thing to really keep on your radar. Have a look in FX markets now. If I look at my scans that I produced, we've got bearish reversals playing through in Aussie yen, Aussie dollar, euro dollar, sterling yen, cable. And I can go through there, but there's reversals playing through all over the shop at the moment. And if we look at the US dollar, I think this is a really great place to start. Now, as I say, you'd usually see a situation where bond yields fall, and on a relative basis, we look at that. But you can see that the dollar made this new low, and then it's come back and it's closed firmly above Friday's low high. But I think that's probably down to the fact that no one was really trading that session. So we've seen this reversal playing through. The question is can it break through the sort of 92.50 region? If that continues to push higher, I think that could have big implications for global markets. The currency that I really want to look at in that situation then is dollar CNH. I think this is just such an important currency for traders to look at. And again, we're just sort of pushing this top end of the range. Another outside day reversal playing through. If dollar CNH pushes through these highs here, 648, I reckon the dollar is going to continue to push higher on a broad basis, not just against the euro, but I think specifically against currencies like the Australian dollar, which we can see here having this sort of, let's just get rid of all this. This is my playbook yesterday to sell rallies into 76 cents. But again, massive spike up after the RBA and going through into Europe trade. Let's have a look at the intraday chart. Yeah, nice move up as we went, back into European trade, and then really just as the US trading cash session starts to unwind, bang, down she goes, down to 74.80. So it's been a really big sort of collapse coming through in risk currencies. The commodity currencies have been pretty badly beaten up. If we go into dollar CAD, which has been, interestingly, well traded overnight as well. There's cup and handle that's played through, and again, we're just sort of testing these highs, 124.60, this kind of region. We've got a double top in play, but if this can break through here, that has to be on the radar. Dollar yen, well, that's probably one of the dollar pairs which hasn't really benefited. Obviously, the yen's been one of the outperformance in this risk-off vibe that we've been seeing. So again, that looks like it may have some further downside. If yields continue to push lower, then that could be one for the radar as well. Again, right, let's go into the commodity trade because this is really what's been driving everything. Big bearish outside day reversal playing through in US crude. Brent crude, obviously, similar situation. We've seen a big deterioration in relationships between the United Arab Emirates and MBS against really the Saudis and also the Russians. And it's really been deteriorated, not just because of the levels of production that needs to be increased, but the duration of the agreement and the tenure of the agreement, which has been debated. There's clearly fractured situations playing through, and the market's feasted off that. They pushed oil up to $77, as you can see here in US crude. We should really be looking at Brent crude because that's the natural reflection of this. Yeah, we saw that trading up into 77.82. It's collapsed. And that's, as I say, that's reverberated across markets. And the US have weighed into this situation. They're talking about potentially selling some of their special drawing rights, their special reserves, into the market. But I think the market is now of the belief that we probably will see an agreement playing through. And the US are obviously in the heart of that as well. So oil prices have really collapsed pretty hard on the back of that, and the energy sector taking the wind out of the sails. Gold markets, well, a big pin bar reversal playing through. Can we see new lows, and can we see that trading back below the 5-day? The bulls really would have liked to have seen it breaking out and closing above this range. It looks quite promising, but this candle needs monitoring. And then let's have a look at what we've been seeing in crypto. Yeah, good gains really on the session. The one I've been banging on about is this link. Look at that setup. I really look. In fact, it's broken through the downtrend. We've got this continued push up. If it breaks through 20, I think this could be off to the races. So one to look at. We have seen some good buying generally in crypto, and it's been. It still needs a bit of work, but that's been a place where we've seen a few people looking to come back in there. So really interesting setup. That 10-year under big declines. We've seen the Nasdaq outperforming S&P. It's relatively flat, but if you look under the bonnet, you can see some big movement playing through and some big interesting moves playing in crude at the moment. So some interesting moves on the markets. Trade them with Pepperstone.